Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Thursday and it's the 15th of June. My name is Russell Shoma, Senior Market Specialist at FXCM, and my email address rshore@fxcm.com. Just going to go ahead and bring up our disclaimers. We'll start off with the high risk investment warning. I'll keep this on screen for a few moments. Hey, Anna, nice to see you on the webinar. Howard, welcome as always. Thank you, everyone, for logging in this morning. It's much appreciated, as always. Just want to keep the high risk investment warning up on screen for a few moments longer. All right, let's bring up the market commentaries disclaimer. And just our references, which would be Market Scope 2.0 and Trading View. And what we'll do is we'll take a look at Trading View first. There's a few things on Trading View, I think, just to monitor. The first thing would be the 2-year yield. The Federal Reserve held rates yesterday. I think that was pretty much in line what we all thought. If you take a look at the daily on the US 2-year yield, the 2-year yield's a good idea of monetary policy. You can see that the candle yesterday is a spinning top. See that? It's basically telling us a little bit of uncertainty coming into the fixed income market. And the idea behind that, I think, is that this is a skip, or is it a pause? So they're kind of like, there's a sort of, we had a fork, we had a crossroad, okay? And I think we had a crossroad because of the inflation data that is coming out. And we're going to discuss that inflation data in a moment. I just wanted to show you that there was some uncertainty yesterday. If you take a look at the dollar, all right, now let's go through to the weekly chart here. And you guys know that we have been following the dollar quite closely, and you know that we've got this symmetrical triangle. Let me just make that a solid line. We've got the symmetrical triangle. It's moving in a sideways consolidation, and the idea is it going to break down below the lower trend line, the lower barrier, or is it going to move above? And what's interesting is that there is been some sort of divergence away from the 2-year yield. The 2-year yield's moved up. The dollar hasn't followed suit. I wonder, just to throw another sort of theory out there, I wonder if it's the dollar that's leading. And I wonder if it's the 2-year yield that actually starts coming down. In other words, should we expect a breakdown in the greenback? That's going to be very interesting. Now, there is a case to be made for a breakdown in the dollar, and there's a case to be made for the US 2-year yield to actually start moderating from here. We'll have to see if that is indeed the case or not. But the way that we're going to discuss this is we're going to go take a look at, I know this is a busy chart, just stay with me here. We have looked at this before, but not recently. We've got, in fact, we could take the bottom out. I don't think we need the bottom in, so we'll just make it a little easier. We've got two series on the charts here. We've got core CPI. Core CPI is the black line. Okay, that's the consumer price index. And then I have overlaid it with the PPI, the producer price index. And what I think is interesting is the 70s into the early 80s compared with our current environment. So what happened was we looked at this probably sort of a year ago. After Russia invaded Ukraine, the supply side, oil, wheat, commodities in general started climbing very high, introducing supply side inflation, and to the point that we were looking at something called stagflation, high inflation and low growth. And the last time we had something like that was in the 70s and 80s. And you can see that here is the PPR in the 70s. So this was the first oil crisis. This was the second oil crisis, really jumping. This was the, beg your pardon, let's just drop that off there. This was the invasion around here. Okay. So the PPR sparks, and it effectively pulls up the core CPR with it. That's this the black line. So the red line PPR, the black line core core CPR. And the reason we're bringing this up is because the monetary policy that is being directed at the moment is being directed to control inflation. And to control inflation, we are raising interest rates. Yesterday, we paused, or we skipped. Again, now I'm asking, is it a skip or a pause? And an argument can be made that it's a pause. Take a look what happens when the PPR drops down. So if we go back to the 70s, and we've got the PPR dropping down like a stone here, CPR really follows it down. Core CPR really follows it down. And again, in the early 80s, when the PPR drops like a stone, the core CPR tends to follow it down as well. Well, we've just hit the crossroads here. We've just hit the crossroads. The PPR has dropped like a stone, and I wonder if it's going to pull the core CPR with it. And if it pulls the core CPR with it, if inflation is starting to trend down, then I think we're pretty much near the apex of the rate hiking cycle. And if we're near the apex of the rate hiking cycle, well, then the dollar kind of loses its support, right? Let's take a look at the dollar in a little bit more detail here. And I'm just going to bring up our main layout on market scope. Just bear with me a moment. Market scope's been very slow the last few days, and today is no exception. Okay, here it is. Let's put it across. All right, let's go through to the US dollar. And I like starting with the US dollar. It's the way that I view the financial instruments is that it's a chain, and there's a cause effect along that chain. And the very first link, the very first cause is what's happening with the US dollar. And we can see that the US dollar here moving in the sideways direction, but the last reference candle is to the downside. So there is weekly weakness. And I wonder if that is going to introduce a challenge to the lower boundary of the symmetrical triangle. Let's take a look at the daily chart. And here you can see that the daily chart is in zone 3, and we've got some blue. We've got some blue. All right, so let's just understand what we're looking at here. I'm going to just bring up Microsoft Paint. We'll just add a little bit of theory to this. So we've got a weekly bearish reference candle, and then we've got a daily zone 3. So it seems to me as if there is a downwards bias here until proven otherwise. And then what happens if there is a downwards bias? Well, we try and exploit the bounces in downtrends. Try to exploit the bounces in downtrends. So here's the bounce, and here's the downtrend. Okay, you can actually see that the RSI is sub 50. It's on the bearish side. It's on the bearish side of the 50 line. So let's go to the hourly chart and let's take a look at what we can glean here. Now, yesterday we suggested that we may get a swing down. We got it. We got it. And then once the monetary policy was announced, we went kind of haywire as the market tried to discount what was being said. But the idea here is there a potential rally in the downtrend? In other words, 1, 2, 2, 3. 1, 2, 2, 3. Okay. In fact, let's do it this way. Let's be a little loose here. Let's make this 1, 2, 2, 3. I'll tell you why we'll do this, because we'll add a fib. So we'll take a look if we can get a fib line. Okay. Now, what we have here is a effective rally or pullback into resistance. Let me try that again. There we go. Here's your resistance. So we're heading into resistance. Okay. We've also got an overlap with the R1. So we've got two layers of resistance there, R1 and price resistance, right? What about a fib? Let's put on our fibs. So we've got about a 62% retracement there. Okay, so I think that this is an interesting area to monitor. I don't know if the price is going to react off of this level. I don't want to make that prediction, but I want to react off of it. Okay, I want to see if there is a reaction at R1. How do I see if there's a reaction at R1? I want to see if the EMAs cross over to the downside. I want to see if the stochastic crosses over to the downside. And if we cross over to the downside, okay, we really need momentum. And momentum is defined by the lower quintile to the downside and the upper quintile to the upside. So if we go into the lower quintile, then and we hold there, then potentially we get some sort of push down. I'm just taking a look. Anna's written here, how do we get the back webinars now that there's no Telegram channel? So everything is on our YouTube channel. If you go into, there's two ways to do it, Anna. You can go into the YouTube channel, or you can go onto our Insights page. Our Insights page, I upload the videos onto our Insights page every day, but that one you'll only see the webinar of the day. To get the back webinars, go onto our YouTube channel. If you have any issues finding those, just send me an email, and I'm happy to direct you towards it. All right. So let's just paraphrase. There is a bearish reference candle. There is a potential pause. Potential. I don't know. A potential pause in rates. It really depends. Okay. It really depends if the PPR does have the influence on the CPR. Okay. So we're going to have to watch that. And if it does have that influence, then I think that the dollar loses that support. And if the dollar loses that support, let's go into Euro US dollar, okay? Because then the analysis of Euro US dollar becomes a little clearer. So let's just bring that up. And how does it become clearer? Higher trough, higher peak, series of higher trough, higher peaks. And now, okay, we've got a higher trough question mark here. If we carry on moving in this direction, in the upwards direction, and we close above this green horizontal, then we have a bullish reference candle in here. And if we have a bullish reference candle in here, we'll take a look at the RSI. It's popping above 50. Okay, it's popping above 50. So it does look as if we're getting some sort of bullishness coming in on the euro side. Let's take a look what's happening on the daily chart. And you can see that we're in zone 1, the upper blue, upper red, but we've got some red in terms of the candle. Take a look at the RSI. RSI is nicely above 50. Okay, so just like we did the theory, okay, if we have something that is moving up, which it looks as what the euro is trying to do, okay, we want to see if we can exploit the downsides. Now, there's an issue with the euro today. Okay, there's the issue with the euro today. What's the issue? We're going to have the ECB making its rate announcement today. So the ECB is coming out with its main refinancing rate at 2:15 ZA, which will be 1:15 UK. And then President Lagarde will be speaking at 2:45 p.m. ZA, 1:45 p.m. UK. So expect volatility. So just expect volatility here. If you take a look at the hourly chart, this is what we looked at yesterday. We looked at a potential bounce. We got it. We got it, and then things went haywire with the Fed. But here we are, pull back to resistance turn support. Okay. Here's the resistance. Here's resistance. Here's support. Here's support. Okay. So we've got a support level at the central pivot. We've got price support very close. And now we want to see if we get the crossovers. Crossover 1, crossover 2. And if we get the crossovers, we're not guaranteed of anything until the momentum kicks in. And the momentum will kick in when the stochastic makes its way to 80 and holds. What's the caveat here? ECB meeting. Got to be very careful around that ECB meeting. Okay. One more. Let's take a look at DAX. All right. I really am interested in the DAX chart. There is theory in motion here. So what do I mean by that? Well, I've drawn this trend line. A trend line doesn't define the trend. Peak and trough analysis defines the trend. The trend line defines the speed of the trend, the momentum of the trend. And effectively, a trend line that is touched twice is what we call a tentative trend line. It looks like there's a speed relationship there. We're not quite certain, but if it touches it a third time, that's a valid trend line. Well, we're getting it touched the third time, and it looks as if the trend line is holding. We've got the RSI above 50, below 80, so it's moving along nicely. We go through to the daily chart, beautifully in zone 1. RSI nicely above 50. Go through to the hourly, and what we can do here is see what type of support we have. Let's get rid of all of these. And right away, you can see that price is looking for support to the central pivot. Perhaps an overlay of polarity. Perhaps it's kind of in the middle of P and S1. But what we want to see is a bullish cross of the EMAs, a bullish cross of the stochastics. If we get that, because I don't know if we will, but if we get that, does that guarantee a swing? No, we need stochastic to move into upper quintile and hold. You see, when we get into upper quintile and hold, wonderful things happen. You get swings. Okay. You get swings. See that? Beautiful. Let's cancel that. I want to put a trend line in. There we go. All right. So that's where we'll take. That's where we'll end today. Just keep an eye on the price, this potential price support pivot area. Are there any questions? Please go ahead and type those in. Any questions? Please go ahead, type those in. If anybody needs some sort of direction towards our YouTube channel, you're more than welcome to email me and I shall send you the links. But if you just go into YouTube, go into our FXCM channel, you'll see under our playlists. All right, guys. Thank you, Anna. Have a great day yourself. Thanks, Howard and Mia. Nice to have you guys on the webinar. Thank you, everyone, for signing in. Really, I must just stress and reiterate, it is highly appreciated. Thank you very much. And hey, Lisa. Nice to have you on the webinar. Hey, Kim. All right, guys, let's wrap up here. By the way, before you go, tomorrow is a public holiday in ZA, so there won't be a webinar tomorrow. Okay, so we'll pick up again on Monday. Thank you very much, guys. Have a great weekend. Cheers. Hey, Demir. Nice to have you in the webinar as always. Cheers, guys.